Welcome back to another episode of That Backyard Property Pod. We are here again today for another mini episode. Today we are jumping straight into how to upgrade your home. This is one of the most topical questions I get asked every single day. And what I mean from people that are upgrading, it's if you have your property and you are looking to upgrade to the next property. And it's generally because your family has grown in size. And so this is the most topical part of what we're doing at the moment, especially in Perth, because what we're finding is the market is moving so quickly that people are struggling to get into that next property or at least find that next property whilst also holding on to their current one. And one of the biggest fears people have is buying that next property and then not being able to move into it in time, so they have a bit of a delay between selling their property or buying the new property, especially when you have kids, because moving sucks and moving with kids is even harder. And so what we're trying to do is trying to map out a really clear step process to be able to move from your current property into that next home. There's a number of ways we can do this. One of those ways is the way that I would probably prefer it being done because it gives you the most flexibility. However, you need to have a certain level of income or value or equity in your property. And what this means is you've got your existing home, which either has a debt or if it doesn't, even better. But if it does have a debt, what we're trying to do here is trying to work out how much value in that property we can extract as a deposit for the next one. The benefit of this is we can do this first part as soon as possible, get access to that deposit so that you can then start shopping for that next home. Then there's no pressure on finding that home because if you don't find the right one, you don't have to pull the trigger. So essentially you have this deposit ready to go to buy that next home. And that deposit can sit there for as long as you want because the loan product would generally be interest only, which means you're not being charged any interest or repayments whilst the deposit is sitting there against the home loan that we've just taken out. So this is one way we can do it. The reason why this is hard at the moment is because the borrowing capacity is generally less as interest rates have increased. A lot of people, especially in Perth, have built up enough equity or value in their property over the last couple of years, but their incomes might not have increased the same amount and therefore don't have enough income to service or pay for their existing home plus their new home. So this is an ideal way to do it, but it doesn't suit everyone. So what's another way? Another way is making an offer on this next property subject to sale. What this means is you're buying this next home and it's on the condition of you selling your current property. The biggest problem with this is most agents and of course their sellers don't want to accept that offer because they don't know when you're going to sell your home. And so, therefore, there's no guarantees to the seller that you are going to be able to firstly sell your property and secondly buy theirs in a specific period of time. So a subject to sale doesn't always work, especially in a hot market like Perth. Or if you're trying to buy at an auction, then we can't have a subject to sale in that circumstance either. Another way of doing it is if you actually go ahead and buy a property and have a long settlement and hope that you can sell your property in that period of time. Quite risky, not what I would advise because you just don't know what you're going to sell your property for. Or on the flip side, you go ahead and sell your property for a long settlement and you just hope that you can find that next home in that period of time. There's a lot of stress in that, and I wouldn't advise that either, but it's an option, and that's what we're here to provide. The last way we can do it is what's called bridging finance. And I've left this to the end because it's becoming more and more common, and it's probably the most complex aspect or option that you have available to you. Now, bridging finance in its simple state is where you buy a property whilst you still have your existing property, and you buy the new property with the full amount you need to purchase it, plus any costs, unless you've got savings, so plus any costs. And then you settle on that new property. After you settle, you can then go ahead and sell your existing property. So the terminology in this aspect is when you've purchased this new property, you'll have a peak debt, and the peak debt is the full debt needed to buy plus your existing debt. And on the other side of that, once you've sold your property, you then have the end debt. And so the end debt is after you've sold your property, you've used your sale proceeds to pay down the loans, and you're just ending up with that end debt attached to the property you've just purchased. Not all banks will do this. The big four will generally do this. Some of them have certain stipulations around it, so it's really important to speak with a broker before going ahead. So that's one important aspect of it. The other is bridging finance is generally only for a 12-month period. So you have 12 months to sell your property, and in that period of time, the loan that you get for the bridging, so for that peak debt, can be interest only. Some of the banks will make you pay repayments on that peak debt, or others will just capitalize or add that interest, and then it comes off the sale proceeds once you sell your property. One of the big negatives on this is the interest rate on that bridging loan can be quite high. So Westpac, for example, is sitting around 9%, which is quite high. So you're really wanting to sell your property. Obviously, we are in Perth and that market is still strong. So anyone that I'm helping in Perth that's used a bridging loan, they've generally sold their property pretty quickly. And the beauty of that is they've moved into their new home and then sold their other property and settled a week or two later. So they've had a week or two to move into their new property, get settled, kids have moved in, all that sort of stuff. And then they've sold their property, given the keys away, and then paid down their debt. So in a really strong seller's market, bridging can work in your favor because the period while you're holding that peak debt can be quite short. Yet it gives you the ability to move in to your new home and secure the new home and move in and then sell yours. So in terms of the current environment, it's obviously different across different markets within Australia. And so it can vary depending on where you are. So it's so important to reach out to a mortgage broker to understand the preferred way of doing it in your particular market, but it's generally all pretty similar. So if you are in that position where you're wanting to buy that next home, that forever home, that family home, where you want to move to, where you want to be for a long time, yet you don't know how to get there, then reach out. We are doing this on a very regular basis because it is the most tricky part of upgrading a home, trying to sort out the loan part to it. So reach out. Cannot wait to help. Send through any questions. I'd love to tackle them with you, either in person or on a Zoom, wherever it might be. Send them through, or I can tackle them on the next podcast. Otherwise, I cannot wait to see you again next week.